Hey guys, hope you are all having an amazing weekend. We are once again about to begin yet another week in the battlefields that are meme stocks. I want to take a moment to acknowledge the feelings that some of you have. This past week was very demoralizing for many, as we saw our favorite stocks break pivotal support walls and slide with little fight back. I have explained that this was to be expected. I have been saying it for months actually, and that a lot of the reason for this has nothing to do with meme stocks themselves but rather overall market conditions. But the charts are red at the end of the day and explanations don't always soothe the minds of many, so I wanted to tell you, if you think this is getting under your skin, if this is affecting your work or overall day, I suggest you take a small break from trading and focus on other aspects of your life. At the end of the day, we are just going to hold, so unless you are buying meme stocks constantly, there is little use in watching the charts on the daily. I will be here every single day talking about meme stocks and only meme stocks from here on out, trying to provide some perspective if you need an opinion into what is happening. Always remember, with you there are literally million other people buying and holding, seeing much of their gains erased by these trashy market conditions. Heck, it's not even meme stocks, it's the entire stock market. Things are not boding well and many are starting to think we could be entering a bear market, with a reversal that threatens to erase some of the gains the overall stock market made last year. I still think this is going to be a momentary dip before continuation of upward movement, so I appreciate the dip and it doesn't affect me that much. Also remember, be careful how you invest your money. I know a lot of you put your entire spare money into meme stocks, and though it is your decision to make, I caution that you are wise with your money and don't throw all your funds into anything all at once. I say do it in portions and on a timely manner, that way your bank account never stays in zero. Anyways, today we are going to talk about what awaits the stock market in general this week, since market conditions are the current biggest factor determining meme stocks' poor performance. I have also received a lot of questions regarding Evergrande and the effect it is having on the Chinese economy overall, so I will make a big DD segment on this on tomorrow's video. I want to announce that my Discord is officially open to everyone and the link will be in both a pinned comment in this video and in the description of the video below as well. $25 or higher Patreon members will have exclusive access to the Room of Operations, which is where I will provide daily scalping alerts along with a thorough day trading manual. If you are interested in this, sign up for my Patreon, link in this video's description as well, and be sure to message me through Patreon your Discord name so I can give you exclusive access to the content. It took me a little bit to get everything set up, so I apologize for the delays, but we have finally made it. Hope to see you guys out there in my server. Before we begin with today's content, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. So the biggest thing to look out for this week is fourth quarter earnings, which are expected to reveal strong growth and could potentially rally up the markets for a bounce back after poor trading sessions during these past couple of weeks. Economically sensitive stocks are also expected to drive in stronger performance in these reports, which alongside technology sector, would cement some serious confidence in investors that the market is fundamentally strong and that there is strong demand. What will make this quarterly earnings different than others is that investors, for the first time, we'll get to see how inflation is affecting each respective company and how these companies are dealing with the challenge. The Fed has done a horrendous job at controlling inflation, and I even argue that they have been a big factor in fueling its growth and dangers, and now with the last report showing it grew to 7%, everyone wants to know if companies are seeing sales and revenue fall down because of it. Consumer behavior is pivotal in these dark times, and how businesses deal with higher costs of business will determine if we are to bounce back or if the stock market reversal is really intended to erase a huge chunk of the gains the stock market had last year. The S&P technology sector is expected to increase earnings by 11%, and other companies are estimated to come in at 20% growth year over year. If companies beat this estimate, which if they do, they are likely to come in around 25 to 30%, we will see stocks shine bright like diamonds. So, like I said, we are not looking too much at tech companies like Netflix, as we are looking for more sensitive stocks in the energy, materials and industrial sectors. Materials sector is expected to see earnings grow 62% and industrials by 52%. Energy is expected to have a very sharp upward growth too. The financial sector, in which companies are categorized as a cyclical stocks, is expected to have smaller profits, with Wall Street expecting figures to be around the 2%. Consumer discretionary stocks, the ones that don't account for online commerce, are expected to have earnings growth of 33.9%. Last thing I want to caution you guys regarding the overall market is about the psychological shift of investors. During the onset of the pandemic until now, investors have been wanting to see stock growth at any price, disregarding any reason. This is a reaction to the dependence of wanting to be comforted by the markets that companies are still strong and will make a push back. Last year, we saw companies have great numbers in growth, which is why the markets had the best rally in recorded history. However, the growth they had ended up coming at a very high cost, and as investors worry that markets can rise during the pandemic ease off as we just experienced that they now want to see growth come in at more reasonable prices. They want more balance rather than cathartic growth at any costs, since the psychological dependence for performance has already been soothed. Volatility will continue this week until we get the actual figures showing performance, and then the markets will either start rallying or continue sliding. Also expect the bond market to have a bigger effect on stocks' performance, as the Fed's hawkish stance will be making rounds and keeping investors up on their feet. AMC and GameStop are affected to a degree by the market, though not completely since they are trading by a different set of weights. However, due to the market's recent strong volatility, they have been dragged down and shorters have made the impact so much worse. AMC and GME are the best stocks in my opinion, and the only thing that is going to really help solidify them is stronger earnings in their reports. With GameStop's NFT marketplace soon to be announced and AMC having so many movie releases this year, I think they are set to make a strong comeback, especially since Wall Street is closely monitoring the comeback of these two companies. For now, enjoy the dip because shorters control how we trade on the daily, but we control the outcome and the endgame here. Let's now bring the subject directly to the stock charts for AMC and GME. Beginning with AMC, it will find support at 19.51, 18.75 and 18. Resistance will be met at 20.82, 21, and 22. AMC is impossible to predict, but if I were a gambling man, I would say that we will retest some of the support we built on Friday's trading session. The stock had a bit of a bounce back after testing the low at 19.51, but it was very weak, and AMC's after-hours performance left a lot to be desired, constantly breaking support over time. I think we will also see AMC try to bounce up stronger this week, with the biggest resistance points being around 23. Right now, our primarily goal should be to get AMC out of these low levels and get it to consolidate above 23. To do that, we need to be above 21 by Wednesday. If we aren't above that price by Wednesday, from a probability standpoint, I think AMC is set to end the week testing or below 20. AMC is super cheap at these current low levels, and as a business they are also performing well in the sense of driving in people into their services and into theaters. However, due to the shorter's weight of manipulation in these poor market conditions, even the most bullish news don't even tingle the stock into moving up in these times. As such, I think the overall market has to improve to have AMC bounce back strong. Until we get those quarterly earnings, I don't see a strong bounce back for AMC. Enjoy the dip if you are buying this week, and if not, don't sweat it. GameStop will find support at 112, 109 and 107. Resistance will be met at 120, 123 and 126. GameStop has been trading incredibly weak, with a really ugly fall this past Friday. Much in line with what I just said regarding AMC, market conditions are being used by shorters to really double down on the damage they are doing to GameStop's trading performance. This week's stock market performance will determine if we get a respite from the boot of Wall Street's bullying or if we are to keep on breaking lower and lower. I see GameStop consolidating a bit between 112 and 120, but I can also see shorters wanting to test and break that 112 wall, which is very weak to be honest. As meme stocks continue to get pummeled, shorters and Wall Street are trying to get people to get bored out of these plays while also signaling to potential new buyers that these stocks are done and over with. I will continue to amass shares where I can while providing information that exposes Wall Street's corrupt nature. I cannot wait for the day to come when GameStop suddenly jumps past 500 in a single trading day. For now, I see dark days ahead for the week, and unless we get a market rally, you better get accustomed to seeing red. And that is all I have for you guys today. Remember to join my Discord linked below and become a $25 or higher Patreon member to enjoy some really amazing exclusive access. Hope to see you all tomorrow on the next video, and thank you all so much for watching this one to its end. Let me know in the comments how you feel about the video. what you think about this week and if you plan to buy more or just hold. I do plan on investing a relatively good chunk on GameStop this week, which I will screenshot and post on my Twitter for the sake of transparency with my audience, since I like being as real as I can be with my favorite people in the world. With all that said, I hope you guys continue having fun today. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Until then, enjoy the rest of your weekend and to the moon.